listening to the Agent Survival Guide podcast, a podcast for today's insurance agents. Informing, educating, empowering, improving the way you do business in an industry that's anything but static. In today's episode, we are unpacking insurance hierarchies, helping you learn about how these organizations work and which to partner your insurance business with. FMO versus IMO versus NMO versus MGA versus GA. What's the difference? Written by Roxanne Anderson. The amount of acronyms in the insurance industry is astounding, so much so that alphabet soup is a running joke. But in all seriousness, what these abbreviations stand for and mean is usually pretty straightforward. Like, for instance, AEP stands for Annual Enrollment Period, when people can update Medicare plans each year. Fairly straightforward abbreviation, term, and definition. Unfortunately, simplicity isn't always the standard. Specifically, agents may hear and know what FMO, IMO, NMO, MGA, and GA stand for, but not know what they actually mean in regard to the business. The 5 acronyms I just mentioned all relate to different insurance marketing organizations that independent insurance agents can partner with to do business. If you're a new agent, I apologize because unfortunately, there aren't really set industry standards that establish what an insurance marketing organization is called. That can make trying to grasp what sets them apart from one another difficult. We want to do our best to provide a resource that rectifies that, hence this episode. You might be wondering, why all the acronyms? Or maybe you're wondering why all the initialisms, and we will have a link to explain that distinction in the episode notes. So why does the industry need all these titles and acronyms or initialisms? The answer typically lies with insurance carriers. Carriers want to do a couple things: ensure everyone is paid appropriately, encourage more production of their products, and keep everything organized. To accomplish all this, carriers name and categorize. It's a way to bring order to the industry. Other industries have entry, mid, senior level, and managerial employees with varying responsibilities and pay levels, working together in different departments serving different purposes. You can think of titles in the insurance industry in a similar vein. Because there aren't set industry standards, however, to establish what an insurance marketing organization is called, carriers end up deciding who qualifies as what. Each carrier may decide a little differently, creating different labels and standards for FMOs depending on production requirements. Carriers will also define production requirements differently, or even introduce new names for certain top-producing organizations. All these titles for insurance marketing organizations fall into a natural hierarchy. This hierarchy tends to go from top down, starting with the top of hierarchy, which can consist of either an FMO, NMA, or NMO. The next tier can contain an FMO, IMO, and NMO, followed by an SGA, then MGAs and BGAs, followed by GAs. Next comes street-level agents, followed by sub-street-level agents. And of course, these are all general categories. More sub-levels may potentially exist. Generally speaking, though, the higher up the ladder you go, the more the agent or entity is poised to earn in commission and or override. But definitely don't discount partnering with the smaller organizations for that reason alone. For the purposes of this episode, we are keeping it broad. So generally speaking, how do FMOs, IMOs, NMOs, MGAs, and GAs differ from each other? And then We'll also touch on the NMA and SGA definitions as we work our way through a typical hierarchy. We'll start by discussing the term that applies to us here at Ritter Insurance Marketing, and that is FMO, short for Field Marketing Organization. Before we get into differences, let's create a baseline definition of an FMO. This type of organization is a company acting as a liaison between an insurance carrier and an agent. The FMO connects the two parties through a contract, which permits the independent agent to sell the carrier's products. When they sell a policy, the agent earns a sales commission, and the FMO earns an override, both from the insurance carrier. FMOs are typically top-level organizations that are licensed to sell health insurance products in most, if not all, states. They work with hundreds to thousands of agents and multiple big-name and small-name carriers all across the United States. Almost all of an FMO's contracts are direct with carriers, and FMOs can sometimes offer agents contracts that provide higher than street-level commissions. In general, FMOs also offer agents a lot of other perks they can't get elsewhere. For example, Ritter Insurance Marketing, the company that powers the Agent Survival Guide podcast, is a national senior market FMO. Organizations like Ritter offer independent agents training and support, like through this podcast and our Ritter blog. We help with tough cases, premier technology, and other tools too. The idea is to help agents more easily get started in the industry and show how to grow your business beyond expectation. And if you'd like to get an inside look at our state-of-the-art tools and our carrier and product offerings, we recommend registering with our site, ritterim.com. It is free to do that. We'll have the link in our episode notes to help you get started. Couple more things about field marketing organizations to cover. While FMOs focus on health insurance products, they may also offer contracting for life insurance products or other types of ancillary insurance coverage. Agents who work with an FMO may have production requirements they have to meet to maintain their commission levels. It's also worth noting that agents who partner with an FMO and later wish to leave the organization will have to get a release from the FMO. Now, for an extensive exploration of FMOs and more information about what to consider when you're thinking of joining a field marketing organization, definitely check out Ritter's free ebook, How Insurance FMOs Work. That is also linked in the notes. Next up on our list, Independent Marketing Organization, or IMO. An independent marketing organization is basically the same as an FMO. Some agents believe FMOs tend to focus more on health insurance products, while IMOs tend to focus on life insurance products, but this isn't always true. IMOs are sometimes a little smaller than FMOs and may not be able to pay agents as much in commission as some FMOs. Like FMOs, IMOs tend to be licensed to sell multiple carrier products in multiple states. They work with hundreds to thousands of agents and also usually offer those agents valuable training and support. What about a National Marketing Office, the NMO? When it comes to defining national marketing offices, FMOs and IMOs can be this type of organization. In fact, you may hear an FMO or IMO call themselves a National Marketing Office, or carriers may give this designation to top-performing FMOs. There's really nothing that sets NMOs apart from FMOs or IMOs. It's just more of a neutral term for field marketing organizations and independent marketing organizations that do business across the U.S. A national marketing office may sell both health and life products, or carriers may want to set it apart from other organizations. Moving on to the NMA, or National Marketing Alliance.
This is another title that some carriers give to top-performing NMOs or FMOs that, as the name implies, form a network that collaborates under a similar marketing strategy. This differs from an NMO, which is only a single entity, although both will operate on a national scale. Not all carriers recognize the NMA designation. Besides the collaborative nature and possibly different production requirements, there's really nothing that sets an NMA apart from an NMO, FMO, or IMO. An NMA will still work with many agents across the country, providing contracts, training, and support. The next step down in our hierarchy sometimes consists of supervising general agents, or SGAs. The supervising general agent title is another carrier designation given to some producers who fall between FMOs and IMOs and the next tier down, MGAs. An SGA partners with an upstream entity, like an FMO, and also has downline agents for whom they likely provide training and support. Again, the difference between the SGAs and the next group we'll discuss is typically a production standard set by the carrier. The SGA label is rare, and it's only recognized by select carriers. Managing general agents, or MGAs, are next on our list. Like an SGA, a managing general agent usually partners with an FMO, IMO, or NMO as a downline of these top-of-hierarchy organizations. They also have their own downline agents, potentially in the form of an agency, who they help with their businesses. MGAs can earn more than a general agent through a combination of commission for policies they sell themselves and overrides for policies sold by their downlines, but less than an FMO, IMO, and NMO. Oftentimes, they may have to reach and maintain certain production requirements to keep their status as an MGA. These requirements can vary from one FMO, IMO, or NMO to another, and even from one carrier to another. The MGA term is more widely recognized with life agencies. And to add to the alphabet soup that we are already more than several spoonfuls into, some MGAs may call themselves brokerage general agencies. BGA is also a common term on the life side of business. Sometimes MGA or BGA can be a top-level contract. In fact, the MGA/BGA contract is the top contract offered by life insurance carriers. Good MGAs or BGAs will provide their downline agents training and support, even as much as an FMO, IMO, or NMO. And then we can't forget about GAs, short for general agents. GAs may contract under an FMO, IMO, NMO, or MGA. This contract typically allows them to have their own sub-agents or downlines, potentially in the form of an agency, and likely has production requirements an agent needs to meet to maintain their GA status. These production requirements typically aren't as high as those for MGAs. Like good MGAs, good GAs will provide their agents with some training and support, but likely not on the same level as an FMO, IMO, or NMO. Again, this is simply because they don't have as many resources as the larger organizations, like time, money, and staff members, to name a few. While the line between some of the types of insurance marketing organizations out there may still be blurry, hopefully we have clarified that there's a reason for that. There aren't any set industry standards for categorizing these marketing organizations. That being said, there is a hierarchy to the different organizations and entities out there. when it comes down to it, picking a marketing organization to partner with should be like picking the bank you do business with. You want someone whom you like and trust, someone who can do their part that's needed for both of you to succeed, and someone whom you enjoy working with. Again, if you'd like more information on partnering with us here at Ritter Insurance Marketing, an FMO that is also an NMO, we would love to start that conversation. Check out the Register with Ritter link in our episode notes. Fill out your info and we'll be in touch. Also, in the notes, you'll find plenty of resources to read up on hierarchies and learn more if you're still in the tire kicking phase. Thanks so much for listening to this episode of our show. We will see you next episode. The Agent Survival Guide podcast is a production of Ritter Insurance Marketing, an integrity company. This episode was written by Roxanne Anderson, script proofing by Tina Lamoureux, podcast design by Urban Rivera, recording and production by me, Sarah Ruppel. Follow along with our show wherever you like to listen. Rate and review our show on Apple or Spotify.